Hello friends, in this video we will learn about what is material requirement planning. Let's see what is the material requirement planning. Material requirement planning tries to keep correct raw materials in the correct quantity and at the correct time. This saves cost and enhances efficiencies. It also helps the companies in avoiding any production disruption and bottle linkage due to the materials. Material requirement planning is very important in manufacturing companies who manufactures products because there are need to calculate daily working capital, and for that we need to keep correct raw material in correct quantity and at the correct time. For that we need to information of material requirement plan. Second point is this budget complements the production targets. The other name of this budget is direct material purchase budget. When we are doing material requirement planning, we will get an idea how much materials we need to for the further process, and according to our needs we are purchase that material from the vendors. Next topic is production budget. Direct materials budget along with the direct labor budget and overhead budget is a part of the production budget only. All three effectively from the company's production budgets. At the times, a small budget calculating total units to be produced is also known as a production budget. It is incomplete without the other three budgets. When any person in the company making production budget, they included mainly 3 points, that is the direct labor budget, overhead budget and material budget. These 3 elements are included in the budget and that is called production budget. All 3 points are very important. Without single point, it is incomplete. Now, direct material purchase budget. Let's see what is meaning. A direct materials purchase budget calculates how much material is required for purchase to satisfy the production budget, and this is calculated for each period of the production, usually monthly or quarterly. Now, how to calculate direct material purchase budget? So first point is to calculate your direct materials purchase budget, you will need to following information which will use in the real life example below. First is your production level. This can be found in production budget. Second, beginning direct materials inventories. You will find this in the production budget of the most recent period that was completed. Third point is ending direct material inventories. This will ensure you have enough material for the next production period. And fourth is direct material that go into production. And last point is cost of direct material. We are learn from this table direct material budget. We know what is the direct material budget. Let's see. Budget that shows how much the quantity of direct raw material is required according to the production target level of the particular period of the time is known as direct material budget. C. Components, level of the production. Opening balance of the inventory. It means कि how many inventories are already available in our company. Third is closing balance of the inventories. How much already remain the inventories. And fourth is cost of direct material and quantity of the raw materials. What is how much quantities we need to do the productions. Advantages, when we are making budget, what are the we get ideas or advantages. Keeps the inventories in the check that there is no scarcity. In the manufacturing plant, we need to check all the time how much materials are remain for continuity, for keep continuity our production systems. Second is there is no excess of inventory cost. We must think about the no excess of inventory cost. Third is helps in managing cash flow. And leads to identification of any errors or flaws before the financial year's end. For making this budget, we need to make a table like this: particular, quantity 1, quantity 2, quantity quarter 3 and quarter 4. First, production target, how much we are making a target. Then required direct material per unit, total direct material needed, desired closing inventories, opening inventories, total materials to purchase, cost per unit, and total raw material budget. These elements are added in making a direct material budget. Now let's see what is standard costing. Meaning, importance, advantages, disadvantages, all the points I explain in a very detailed way in the next slide. So let's see. Standard cost. Standard cost refers to expected cost under the anticipated conditions. Whenever we are planning to make something, we are just making a sample example or a sample budget. It means one type of the approximate budget we can call standard budget. Standard cost systems allows for comparison of standards versus actual cost. Differences are referred to as a standard cost variance, and variance should be investigated if the significant. Standard costs are useful when any person want to find difference between standard cost and actual cost. They will get idea how much they are expense more. So it is a very helpful for finding our expenses are more or less. We will get idea about with the help of standard cost minus actual cost. We will get values, and according to that values we can compare our budget. Now, development of standard cost. First is standard costs are developed in a variety of ways. First is specified by the formulas or receipts. Second is developed from price list provided by the suppliers. Third is determined by time and motion studies conducted by the industrial engineers. And fourth is developed from analysis of past data. These all points are very important to making standard cost. Now let's see ideal versus attainable standards. What are the types of the ideal versus attainable standards? So let's see. Ideal standards, it means perfection standards developed under the assumptions that no obstacles to the production process will be encountered. And second is attainable standards developed under the assumptions that there will be occasional problems in the production process. Let's see. Ideal standards means once the person make the assumptions, and according to their assumptions they will make one production process. It means ki no obstacles are occurred when doing a production. And second is attainable standard. Sometimes some issues are comes in the production process, and that time we will waste some materials. That is called attainable standard. So both the things are very important for making standard cost. Now let's see a general approaches to variance analysis. So direct material price and material quantities variance. Second is direct labor rate, it means price, or labor efficiency, it means quantities variance. And third is overhead volumes variance and the controllable overhead volumes or variance. Material variance are occurred when difference between standard cost and actual cost, material cost, are got a differences, like a material price variance or material quantities variance. In this material price variance, material price, it means actual price minus supplier's price, or we can say actual price minus standard price into actual quantity of material purchased. And there are two conditions. Actual price is more than standard price, it is the unfavorable, and actual price is less than standard price, it is the favorable. Now material quantities variance. Material quantities variance is equal to actual quantity of material used minus standard quantity of material allowed into standard price of the material. When actual quantity is more than standard quantity, it is the unfavorable, and when actual quantity is less than standard quantity, it is the favorable. Now direct labor variance, the differences between standard and actual direct labor cost, labor rate or price variance, and material efficiency or quantity variance. Labor rate variance is equal to actual wages rate, it means price, minus standard wages rate price into actual number or quantity labor hours. Fifth condition is actual rate more than standard rate is unfavorable, actual rate is less than standard rate, it is the favorable. Now labor efficiency variance formula is actual number of hours worked minus standard number of hours worked into standard labor wages rate. If actual hours is more than standard hours, it is unfavorable, and actual hours is less than standard hours, it is a favorable. I hope guys you will get idea and you will like this video. Thank you so much. Please share with your friends, families, whoever need this information. Please share with everyone. Thank you so much.